Happy Monday, everybody. Now everybody's talking about oil. We talked about it 3 weeks ago. In today's video, we're going to talk about the two most important technical levels in the charts that we need to pay attention to. And we're going to talk about the true winner of the oil move, which is not oil itself, it's the oil stocks. But there's a really interesting development happening in the oil stocks. You need to know about it. Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Congratulations to Spain for winning the World Cup. Well, also a winner in the past weeks was us, because we were on this oil trade early and we rode it all the way up, especially in the oil stocks. Now, what do we do about oil now that everybody's talking about it? 3 weeks ago, when I talked about it, nobody cared. Now everybody cares. But that's what we want to be here at Hot Trades of the Day. We want to be a step ahead of the market. So if you haven't done so, hit the subscribe button and let's get into the oil chart. Okay, so we got the gap fill right here, as I talked about 3 weeks ago. That would be the target zone. And as you can see, we doinked right off it, and we doinked off the 50-day moving average. That's the purple line you see here in the chart. And this is important, okay? The 50-day in oil is really important, and people are not paying enough attention to it. And let me show you why this is so important. So, as you can see, I started talking about energy and oil stocks about here, late last fall, winter. And, you know, if you decided, hey, that's not a bad idea, I might get in on this trade, you're sitting on some really nice gains. But if you just went with, if we break the 50-day moving average, I'm going to get in. You got in somewhere here and you got a really attractive entry price. And as you can see, the oil price rode the 50-day moving average all the way up. And even in the first correction waves, the 50-day held on the close. Went below it, whoop, vacuum Swiffer, got right, sucked right up, everything below the 50-day. Had that second rally. Same thing happened here. And then we break the 50, we get a retest, and boom, we're below the 50, we get a sell-off. Now, obviously, this has to do a lot with geopolitical situations as well, and how the market interpreted them. Interpreted it wrong, obviously. We talked about it here on the channel. But you clearly see how important the 50-day moving average is in oil for the sentiment, for the broader market, for the way they perceive oil and how they will trade oil. So I told you in a previous video, I don't care so much if we do the gap fill, which was my anticipated move that happened, or if we stop right here at that silver resistance zone, which we broke on Friday. I care about, do we stay above the 200? So that is the first level that we need to see. So obviously we got a lot of geopolitical factors factoring in. At some point, there's going to be an announcement that there's a new peace deal that is in the works, and we're going to see massive profit taking or maybe new short positions in oil. The question for me is, does the 200-day moving average hold? Which would basically mean we stay above $76 a barrel in WTI. If that happens, then things turned bullish medium to long term. The real bullish trigger, though, is if we break the 50. If we close above the 50 and confirm, which probably would be something like 86 to break, and then 86, probably 86.50-ish to 87 for the confirmation. That is when things really gonna heat up in the oil market. And that is when things are turning bullish, especially, again, for the oil stocks. The most money we're gonna make is not in oil itself. That might be a decent swing trade if you're a good swing trader. I personally wouldn't short oil here at all, even though we doinked off the 50-day and we had the gap fill, because we just need one terrible attack of oil tankers in the Strait of Hormuz, or even worse, on oil fields, oil pipelines in the Middle East, or harbors that process oil that are in other parts of the countries of the Middle East that do not have to go through the Strait of Hormuz. Whatever it is, anything like that happens, think of, we get an oil field in flames in Abu Dhabi or in Saudi, what that does to the oil price. You cannot calculate this. You don't know if this will happen, right? Theoretically, even if you would know that Iran would attack an oil field in Saudi, just as an example, you still didn't know if the Saudis won't be able to shut down the drone attack or the missile. So you don't know. So you are taking a bet with a component that you have zero control of and that you do not know. I'm not doing that. I don't care what the chart tells me. I don't need to be in every trade. I'm not in. So as long as we're below the 50 or above the 200, you know what I'm going to do? I'm going to do nothing. Have you ever had this, I'm sure you had this experience where you're out with your wife or your girlfriend and you want to take a picture of the two of you, and the last second she decides, I don't want to be in the picture, and goes like this, and it turns out to be a real weird, funny picture? Well, that's kind of like this. I'm like the girlfriend. I'm like, I don't want to be in this picture. I don't want to be in this trade. I don't need to be in this trade. You know what trade I want to be in? In the oil stocks. Why? Well, because the oil companies, they're going to make a ton of money at these current oil prices. Doesn't matter if it's 76 or 86. Just look where we were a year ago, July, August. We're at around 67. So we're somewhere around 15% higher in the oil price. That is good for the oil companies, which are still cheap. Not super cheap anymore like they were last fall, winter, but still cheap. And, if you signed up for the VIP newsletter, they also pay an attractive dividend. Some of them at least still do. So they are the ones that I'm really interested in. So here's the thing though with the oil stocks. There's a really interesting development. Not all oil stocks are the same. The Europeans as a group are moving better than the Americans, which I told you about again 3 weeks ago. Reason being, it's their component on renewable energy that they build out after the ESG movement that is now becoming an advantage to them. And we're going to look at a couple of charts in a minute. So the Europeans are looking better than the Americans, but there are a couple on the Americans that look really great, but others don't. So there's a real differentiation. And why is that? I think it is because institutions are positioning themselves in energy stocks, and in order to cover it up, they do it very clever. They do it step by step. They don't push up the whole sector. They buy one company and then not the other one, which still looks bad. So it doesn't become so obvious until they're fully positioned. Can I prove this? No. Have I seen this before in the market? Many times. All right. Again, institutions are not our friends. They just want to take our money. So if you know how institutions think and how they act, that's exactly why we got in last fall, winter. That's exactly what I was telling you. If you watch the videos then, I was saying, hey, something is up in the energy sector. The stocks are moving, but the oil price are not moving. I believe institutions are positioning themselves in the oil stocks and they're using the depressed oil price as a cover-up for their movement. That's exactly what happened. And think again, why did they buy the oil stocks, not oil? I just told you why. So, quick side note or footnote, real quick, for the gold and silver bucks here. One of the reasons why I went bullish on oil weeks ago was the positive divergence in the RSI. You see it down there, the green line and the RSI in the bottom of the chart, and then the lower low in oil. And we have a similar thing in gold and silver, huge in gold, huge positive divergence. Hasn't meant anything yet. Also shows you that positive or negative divergence in itself are not a great signal for the absolute low. Yes, it was here in oil. I know, obviously, when I say something, then the chart shows something different. But if you look at the gold chart, then you see, okay, that's been going on for a long time. But gold hasn't recovered the same way oil has recovered. But it shows you this is something to pay attention to and that we might be onto something. And again, hit the subscribe button so you do not miss videos coming up on gold and silver. And we will follow this closely. What we're going to follow now are the oil stocks as promised. So we're going to start with the Europeans. We're going to go with Shell, which looks really, really interesting. And look how good Shell looks compared to the oil price. We are way above the 50 already. We've broken the downtrend that started in April, March, when we hit the highs after the first month of the Iran war. Right? Now we hit this yellow resistance zone. We break through this. We are getting gap fill at least around 40, 50. Probably gonna attack this high, all-time high zone, especially if oil moves. Now, short term, could we retest the broken downtrend? Absolutely. But this is one that I want to have on my watch list. And again, I talked about Shell, I think exactly 3 weeks ago. The other one that I really liked for Europeans, Equinor, Norwegian. We all love the Norwegians after the World Cup, don't we? Well, chart looks outstanding. Again, we're above the 50-day. We basically retested it here. We made a new high already. Doesn't get much better than that. Yeah, okay, maybe short term we get back down to an area of 350 Norwegian crowns. But great looking chart. However, look at Total Energies. That is the big French oil company. That doesn't look great at all. We're actually below the 50. We have not made a new high. We're still in a downtrend. So that shows you, okay, clearly the money that's going into oil stocks is not going into oil stocks blindly. They're clearly picking out companies that they think are winners or have the valuations that makes them really attractive. Now let's get to the US side of things. And here are my favorites. My number one favorite in the US, Chevron. And we talked about it 3 weeks ago. It looks outstanding. Downtrend broken, 50-day broken, confirmed, jumping up pre-market, but maybe we'll get a gap fill. It's only $4. That's not nothing, especially if we go down in oil trying to test the 200. But this is a great looking chart. I don't know what to tell you. Now, on the other hand, look at ConocoPhillips. Looks okay too, but not as strong, but one of the better looking ones, right? So if you now say, well, Daniel, you said there are differences in the oil stocks. Yeah, they are. Look at Devon Energy. Still below the 50, hasn't really done anything, in a downtrend still. That's not a great looking chart. Look at Exxon. It's trying to fight its way. Look, we can even go like this. So trying to fight its way above the 50, but we have the downtrend coming right up. That doesn't look as good as what I just showed you in Chevron. Now another one that looks interesting, keep an eye on Occidental. We know Occidental is kind of, it's like a weird mover. It moves late. It doesn't have the dynamics that like an Exxon or a Chevron has when it really gets going. It comes out of the block late, but then it usually gets, you can make some good money on a catch-up trade. As you can see, it's trying to break the 50-day and the downtrend. So that is one for your watch list as well. But in this case, in oil stocks, if someone would be interested in investing in oil stocks or swing trading the oil stocks, you want to get into the ones with high relative strength. Don't buy the weakness. Don't buy the weak ones in terms of, this is going to be the catch-up trade. The catch-up trade is going to come later. That is the beautiful thing. If you're going to be a swing trader, it's going to be you buy the strength now, and then if oil really breaks the 50, then you also buy the weak ones because then they're going to catch up. But again, I'm not your financial advisor. You decide for yourself. Well, that is it for today. That's it with gold. With oil, we're going to get to gold. We're going to get to silver soon enough, at least. Solid start so far for gold. We're consolidating above 4,000, but we know the levels. I don't even need to bring up the chart. We all know it from heart by now if you watch the videos. 4,070, that's the level. So have a great Monday. Talk to you tomorrow. Bye-bye.